Hello and welcome back to Tech Latest from Nikkei Asia, where we bring you the freshest updates from the technology sector in Asia. I'm your host, Akito Tanaka from Nikkei Asia's Tokyo headquarters, and Cheng Ting-Fang, or Annie as we call her, who is Nikkei Asia's chief tech correspondent based in Taipei, will join us for this episode. We'll discuss the Trump tariff flip-flop and what it means to global tech companies' Asian supply chains. Welcome to this week's episode, Annie. It's really great to have you here.
Thank you very much, Akito-san. I'm very glad to be back on the show again and great to be with everyone online.
All right. So the implementation and sudden pause of U.S. President Donald Trump's reciprocal tariff have caused ongoing confusion. How are global tech companies with extensive supply chains in Asia responding to this tariff mess?
So when the original President Trump announcement came out on reciprocal tariffs on early morning, April 3rd in Asia, it shocked the entire tech supply chain, especially for PCs, phones, and servers. They had just put a lot of efforts to build up alternative production bases in Thailand, Vietnam, and AI servers in Taiwan, but then find out they could face tariffs as high as 46% in Vietnam, and then more than 30% for Taiwan and Thailand. So that could bring huge disruption if that really materializes. It's still pretty chaotic in the supply chain when these on and off tariffs happen over and over again. The Trump administration exempts some key tech products made in China, like smartphones, notebook computer, and servers, but they are still hit with a 20% basic tariff if shipped to the U.S. from China. There's even talks of adding separate tariffs on these products later. So still a lot of uncertainty going on. Meanwhile, game console makers are very worried, according to our supply chain checks, especially like Nintendo, which is about to launch its highly anticipated Switch 2. Most of Nintendo's Switch products are still made in China and now faces a 145% of tariffs if shipped to the U.S. Apple, which is known for its master in management supply chain, might offer some ideas for mitigating these challenges, though its method will be feasible only for large companies that can mobilize their massive supply chain network and change quickly and invest in new production elsewhere. It's not possible for small and medium-sized companies to do so. Apple already produced a significant stock earlier this year to cover the U.S. demand through about summer under normal conditions, according to our checks. It's also shifting some production. Apple hopes most of its new iPhone that will launch later this year for the U.S. market will be mostly made in India. It already supports suppliers there to buy more equipment and add about millions of units of capacity in India. And Apple also has instructed that most of its MacBooks and iPads bound for the U.S. market to be built in Vietnam this year.
And you mentioned these companies are taking, very short-term measures like shipping their product earlier and stuff like that. But are there long-term strategies or solutions that global tech companies can adopt to deal with Trump tariff?
Basically, there are two straightforward options. The first is to avoid shipping anything to the U.S.
Okay.
And focus on non-U.S. markets like Asia, Europe, Middle East, Africa, and Latin America. That way, you avoid the tariffs altogether. For instance, China's Lenovo has told its team that if tariffs continue, they will focus on other regions, including Belt and Road nations and Europe this year. Actually, Taiwanese computer makers Acer and Asus don't think they can raise prices in the U.S., so they plan to rely on inventories they pre-built while putting more energy into non-U.S. market. The second option is for people who cannot abandon U.S. market is to find ways to build product inside the US. But that's not so simple. It's pretty unlikely that all electronic components like displays, PCBs, camera modules, mechanical parts, and casings can be made entirely in the US. None of these component market leaders are from the US. But if you need to ship these components to the US for product assembly, and if those parts are still subject to reciprocal tariffs later on, components and the manufacturing costs and the retail prices will definitely go up.
I see. And you mentioned that the global tech companies and its supply chain companies has been investing heavily in Southeast Asia to diversify its production capabilities. What impact does uncertainty of the Trump administration have on these tech companies' investment in Asia?
I still don't think it's easy to move every type of production like President Trump hoped back to the US. But with President Trump's negotiating with various nations, some countries might end up getting better deals. For instance, the Philippines and India have lower reciprocal tariffs this time around. So even before these tariffs took effect and paused, some companies were looking at whether they could quickly ship final assembly to the Philippines. In the end, I think Trump will still need to work with key Asia economies from the last big supply chain shift happening from Trump 1.0 through Biden administration. We saw Vietnam, Thailand, Malaysia, and Taiwan come out ahead last time, attracting a lot of foreign and local investment. That might happen again. Just the winners might not be the same camp of Asia economies, depending on how these trade talks turn out and whether these economies have good conditions for business to grow. Meanwhile, it's crucial to keep an eye on what China is doing. There's still a lot of U.S.-China tension playing out, especially in Southeast Asia. President Xi Jinping is visiting Vietnam, Malaysia, and Cambodia. So clearly, China wants to expand its influence and form alliances in Southeast Asia at a time when the U.S. is trying to corner China with 145% of tariffs. One thing is certain, major U.S. companies like Apple, HP, Dell, Microsoft, Google will likely keep moving their supply chain out of China, a trend Nikkei Asia have been following and reporting firsthand since 2018. From earlier this year, Apple is still very serious auditing non-China production facilities in places like Thailand, Vietnam, and India. Still, these shifts will take time, usually 5 to 10 years, before we see any truly significant manufacturing cluster take shape.
And more importantly, how does this uncertainty affect the demand of overall tech products?
I think most business executives will tell us that they really hate uncertainty. Some suppliers describe feeling like they are working in an emergency room these days, dealing with one completely different crisis after another. Others say it's like living without tomorrow because the lack of visibility makes planning nearly impossible. That's been especially true lately. Right before April 9th, tech suppliers were worried about their production utilization rates in some facilities to drop as high as 80% because customers like HP, Dell, Microsoft, Google, Amazon, Meta tell them to halt US-bound shipment after the tariff took effect. But just a few hours later, some of these same companies, HP, Dell, and Meta, asked suppliers to gear up, build more products, and ship them to the US during this new 90-day window, moving orders that would have been placed in the third quarter up to the second quarter. Now, with this 90-day pause, electronic manufacturers are again racing to send as much as they can to the US. But nobody knows if all these products will actually sell well, or if this stockpiling efforts will later turn into an inventory nightmare again. if demand falls or the broader economy slow down later this year.
Very good point. And I guess most importantly, who do you think bears the most disadvantage from these uncertainties?
To be honest, I think most disadvantage could be on small to medium-sized companies that has too concentrated market and customers. Bigger companies with more diversified production footprints can adapt more quickly. They also have capital to handle uncertainties and negotiating power to manage price changes. In short, it's a time of big uncertainty, but challenges also bring opportunities. Those who can endure or even turn this disadvantage into an advantage may emerge bigger and stronger after the crisis.
I see. All right. Thank you very much, Annie. It was really interesting.
Thank you very much, Akito-san.
We'll speak soon. You can read more of Annie's reporting along with other stories about Asia's tech industry on Nikkei Asia's website, asia.nikkei.com. Thank you for listening, and please come back for our next episode.